following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Almost everything is more complicated than it seems, but almost nothing is hopeless. Market-wise, let's take a look at it out here. We have the Dow Industrials up 13, NASDAQ down 42, S&P's up $1.50, gold contract down $16.10, trading at $1,234 an ounce. Silver down 9 cents at $17 an ounce. Platinum off $13 at $1,011 an ounce. Copper up 2.5 pennies at $2.27 a pound. Light sweet crude up 54 cents, trading at $43.71 a barrel. Bonds. The 10-year down 4.6, 129.15. 30-year off 4.6, 162.18. King dollar up 506 ticks, trading at 95.08. The euro is down 58, trading at $1.12, and the yen is trading at 111.66. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? It's going to be pretty cool coming into this close. Why, folks? So this is what you have. 2104.27 is the December 2nd swing high. What we're going to see here, we're 2091.51 on the cash S&P, and what we're going to see is you're going to see a failure on price, a failure on volume, and what does that set up? That sets up the SPY to basically back down. And when I say back down, bottom line, this is a monster range that we're in right now. We hit a high out here this week of 2111. Guess what? Back down is down 1881 to 1810, which is the high volume swing low from February 12th. We go take a look at the NDX. We take up the Qs, the 3 Qs. What do you have with the 3 Qs? You got a nice little counter trend bounce going right now. Yeah, I suspect we're going to see this sell off right into the close. Right now, the Qs are down $1.71. We're at 108.95. And what you're going to see here inside the Qs is you've basically just backed off with volume. We hit 111.44 this week. The gap was 111.51. So you get into the gap, rejected price, has lighter volume, and the lighter volume that I'm talking about is from the week from January 8th. January 8th, we did 262 million shares. It tried to get higher with 130 million. What does that set up? That sets up a rundown. First off, it would set up a rundown to the 104. 104 is the high of the week of February 5th. But I do expect we're going to go all the way down to the bottom, but it should get some support at that 104 level. Gold contract. What do we have with gold? Gold contract out here trading down $15 right now, 197,000 contracts. You went higher yesterday. We went topside. We got 273,000 contracts. Pulling back, bottom line, you're pulling back with lighter volume. We hit a low of 1228. Gold is building cause for higher price. If you take a look at some of the gold equities, silver equities, what they've actually done is that they've just set up another ABC structure on the way up. So it's going to be wild watching this whole thing shake out. Bond market. Let's go over to the 10-year note first. We take a look at the 10-year note. What we have with the 10-year note is this. Down 4 ticks. We're trading out at 129.15. The swing low that this is going after right now is 128.01. I expect that we'll make our way down there next week. So we'll see how it hits that number one and see if it actually can break down as it gets into that swing point. King Dollar. What do we have with King Dollar? Good old King Dollar's doing a counter trend bounce. King Dollar, you know, when you talk about coming to a profile, I met Mr. John Logan. It came right into that profile and did a nice bounce off that profile. The profile that we're talking about where that bounce came in from is 93.89. You're at 95.04 right now. You have 20,000 contracts, which is pretty good, by the way. But you're going into 30,000. You know, you're going into 30,500 contracts. So the bottom line, that's a counter trend bounce, has lighter volume. That is projecting that the dollar index is still building cause to get into lower price. Now, let's go over to the E-minis first. So we take a look at the E-minis. What we have is this. We're up $3.75 right now. The E-minis, they had a low today of 20.75. They had a high of 20.89. And right now we're at 20.86. So you get a nice comeback. There's no two ways about that. What's going to be intriguing is coming into the close here, and let's see where this thing wants to trade. The way this is set up thus far, we have plenty of time coming in. It looks to me like we're going to be set up that the E-minis were 20.86, that we'd be actually down at 20.80. NDX 100. What do we have with the NDX 100? Now, the NDX 100 has been the weakest indice out there. And, of course, the reason that it's the weakest indice is, let's pull this up, NQM6 is, okay, so the NDX 100, we're at 44.69. We take a look at this, and what you have is this. The high today is 4,500, 45.01. Low is 44.31. And I suspect what we can get out of this is 45.51. And where I'm going with that, folks, is this. We're at 44.69. When we hit at 10:40 this morning, it got smacked down from 44.51 to 44.31. At the top of that range, that was 17,000 contracts. You have light volume up here for the last 50 minutes, counter trend bounce. It'll back down. I suspect it can back down and go into that 45.51 area. So it's going to be wild watching this thing close out. Now, as you go into the NDX 100, what do you have? Google right now is down 6.9% or $3.88. I mean, that's Microsoft, rather. Google is down $40 or 5.5%. Starbucks is down $3 or 5.2%. And what you're going to see here, one of the main reasons I think that the NASDAQ NDX will give it back again, it's going to be the aspect of who wants to go long inside those tech stocks as we're coming into the weekend. If we go into the Dow Industrials, we look at the strength versus the weakness inside the Dow. Strength today is Coca-Cola. That's a dog. That went down all week. Travelers is a dog. That went down all week. DuPont, I got to look at that. That's up 87 cents. And Goldman Sachs is up 91. Taken away from it on the way down, you got Microsoft as the leader on the way down inside the Dow Industrials. Visa is next. Intel is next. And Nike follows up as number 4. Volume-wise out here, this is what you have. Inside the NYSE, it's going to be light volume. You're at 624 million. NASDAQ, whole different ball game. NASDAQ is already at 1.5. That's saying the NASDAQ's going to do about 1.9 billion. Our phone number is 877-927-6648. Give us a call, folks. Coming right back. Dow's up 23. NASDAQ's down 39. S&Ps are up 2.5.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 10, Nasdaq's off 44, S&Ps are up $1. Let's go over and we take a look at the XLE. Well, first, let's go into the oil market. So if we take a look at oil, folks, what you have with oil out here is this. We are at 43.70 on this contract. You've done 547,000 contracts, which is decent contract value, volume rather. 43.69. Oh man, this is a trip. Okay, so check this out. So 43.69 is your swing point. And, you know, we'll see where this ends up closing out. It's going back and forth between the 43.69 and 43.68. If it closes over the 43.69, guess what? You can go higher. You close underneath it, that'll set up that you make a run down to the $39, and you very well can make a run down to 36.52. If we and the inside, let's go to the XLE, because this is what's saving. This is part of what's saving the S&Ps out here today. So the XLE today is up 88 cents. We're trading out at $66.96. Now this is coming into some major downdraft. Let me put this on a weekly. So it's so cool we can put all these on the weeklies tonight. Okay, so on the weekly it doesn't look bad. Well, 66.96, 68. On the weekly, the XLE still looks all right, you know. So this will be interesting to see, you know, if it can get up into this November 1st time frame, you know. But on the weekly, you close over $64, which is definitely going to close over $64. That's saying it can go to higher price. Now let's go into Goldman Sachs. So inside the Dow Industrials, you got Goldman getting some juice out here today. It's only up $1.34. And guess what? If you look at Goldman, what you have, this has been on a vicious downdraft. Goldman was at $218. You're at $166. You're on a weekly basis. You're coming into 24 million shares, and we're going to do 19. It's not bad. It's not bad actually. So the financials, yeah, 24 to 19 is not that bad. It's lower, that's for sure. And you know, but bottom line, that probably can creep up a little bit longer. That's kind of like how these financials are looking. Let's do the XLF. So you're going to have a little divergence here, which is pretty cool, folks. So that the divergence, XLF, would go like this. And I don't expect you're going to get new highs. My take is that the S&P is also topped out. But what you'll get is that you'll get hope and you'll get faith. And that's always a problem in the marketplace, man. That's what the bulls will get. And the bears will be scared to basically short it because they'll see this, the financials moving. So the XLF, we're coming into 323 million. Yeah, okay, this is cool. So check this out. You're coming into 323 million on the weekly, and you're doing 231 million. That is a larger indication that inside the XLF, it's going to give it up. We hit a price point of 23.63. Oh, this is cool. So if we close under 23.63 on a weekly basis, that's a failure this week on price and volume. And right now we're 23.52 because we got up to 23.63, so we got over the swing point. We close under the swing, we're going to have dramatically lighter volume. That sets up a run into the XLF back down to $20.77. You know, so we get a lot of action all over the place. I suspect we get a big turn in this marketplace, folks. That's what you have happening out here. Let's go to the silver market. We take a look at silver. You talk about volatility, man. This is about as volatile as you can get. Silver, we've done 86,000 contracts today. Yesterday, we did 142,000 contracts. You're backing into 108,000, which is cool. Okay, so silver is also saying, guess what? It's already broken topside. You have the juice behind the move. On the daily, on the weekly, all of the above. And in fact, if you look at some of the equities inside the gold and silver, they look like they're here. I'll give you one that looks like, you know, it got smoked, but guess what? It's not smoked. It's another ABC up. And what it is Great Panther. So check this out. So Great Panther hit a high on Wednesday of $1.64. They hit that high, and it did it with 4.9 million shares. It's come down from $1.64 to $1.39 right now. You've done that, and we've done that on 2.5 million shares. More than likely, this is another ABC structure on the way up. It filled the gap, which if you're in equities that have gaps, you'd much rather them fill them at the beginning and pull back. Why? Because if these things keep gapping and going higher, then it's a huge problem, whether it's a month or 2 months down the road, because those gaps will get filled. So in this particular case, we get down to $1.27. The gap was $1.26. Basically, that's filled. What does that set up? That very well could set up another ABC structure on the way up. And in this case, you're talking about an 80 cents A to B, which would give you the next move up there would be over $2. And if we bring this back and take a look at it, what you're going to see, I believe it's $1.70. It already took out its weekly swing with volume, I believe. Yeah, it took out the $1.49 with volume. Pull this back a little bit more. There's something. It's the next one. There it is up there. Okay, so yeah, the next run is 248. What did I just say? ABC. 1 second. 80 cents. It's not that far, but let me just look at this. 80. It'll be 207. It'll be 207 the next run. Our phone number is 877-927-6648. We go over to the XAU. We take a look at the XAU. XAU trading down $1.97. You're at $80.62. And on the dailies, on the weeklies, all of the above, this also is breaking topside with volume. In fact, this hasn't pulled back much. The high of this week was $85.27. Right now, you're trading at $80.62. We go to the Gold Bugs Index. We look at the Gold Bugs Index. Gold Bugs Index right now is down 550. You're trading at 202. The high of this week was 211.98. And what we are going to have also, I believe, let's pull this back. Yeah, you're going to have, well, we'll see where this, let's see, so 140 million. Get that volume in there today. yeah, we're going to have, on a weekly basis, you're going to have a higher high and you're going to have higher volume. That's what you're going to have out there. Let's take a look at some of the higher volume stocks in this market. And as I said a little bit earlier, the NASDAQ is going to have volume. The S&Ps look like they're not going to have volume. You have the Dow Industrial, Microsoft right now is down $4. You get Starbucks down 3.5. Some of the Dow stocks. You get Caterpillar down 32 cents. Exxon's up 56. We have Disney up 84. United Technologies up 20. You got Big Mac is up 15. Let's go over to Big Mac for a second. Big Mac has been having a heck of a run. They came out with numbers. The numbers were good. I see, and they sold off. Interesting. Okay, so we put this on a monthly. No, yeah. On a monthly, Big Mac, now Big Mac has a great chart, but even on Big Mac, that looks like that wants to pull back. Now that's a big heads up if you get a strong stock, and it looks like it's going to take a pause. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are up 10. Nasdaq's down 42. S&Ps are up $1.50. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 14. You get the NASDAQ down 41. S&Ps are up 250. If we do go dig inside this Dow Industrials as to what the strength is, Coca-Cola is number one. So if we take a look at Coke, Coke's up 95 cents, trading at $44.61. What you're going to see is that, this week, Coke come out with its numbers on Monday. Monday, the stock's trading at $46. It goes from $46, gaps down to $44, and then it then trades yesterday down to a low of $42.88, and does that with 11 million shares. Now, you get a counter trend bounce today, 5.9 million. Guess what? This is a monster ABC down. We'll put this on a weekly. What you're going to see on the weekly is that when we came down, you got back inside the lower range. Now, we're at $44.63 right now. If you close under $45, you're in the lower range. And that would set up that Coke wants to run down to $39.46. Now, where I'm going with that, folks, is this. And this is when you want to start putting these together. We have a high volume low from October of 2014. We have a high volume low that tested it from August of 2015. We have a high volume low from February of 2016. Now, this is what the difference is, which is pretty cool, okay? When we take a look at the S&P, when we tested, I'm going to bring this up so you can kind of see how this shakes out. I'll put it on a weekly so it's a lot clearer, actually. I'll put it on a monthly. No, I'll put it on the weekly. So, when you set that up, what you're going to see on the cash S&P is that the October of 2014 low was 1820. The August low was 1867. The January low was 1812, and the February low was 1810. Okay, so we're dealing with 1810, and you're dealing with 1820. Those are the numbers. Now, what had happened is this, is that when we came down in January and in February, we did hit the low of August as well as the low of October of 2014, and we did that on lighter volume. And that's why this bounce is so cool. So, okay, so now that's the lows. The highs, what has happened here is that we've gotten up here, and guess what? There's no buyers at the top of this range. So what are you going to get ready for? Well, what you get ready for is this. You get ready, number one, that, this is my speculation, of course, that we're going downtown. That's the first part. The second part, and this is where this gets cool for the bulls and the bears, is that because we did test the February and the January levels, and we did that with lighter volume, we very well could do that and reject it again. Okay, so that's a cool heads up. And I suspect that the reason that I suspect that we did reject that, by the way, is that we went down so fast. So how you come into lows or how you come into highs are crucial to understand, what type of power does it have to come through it or to stop it. The cool thing is, folks, is this. That is a monster range that gives you lots of opportunity to either get out of the market, short the market, buy the market, do whatever you want to do. If you're a long-only trader, guess what? It's just put a stop in and keep your cash. The key here is keeping the cash that you have. You've heard me say this many times. What I've seen is this. The market gives all of us, whether you're a bull or a bear, or where you are in the marketplace, at any time in the marketplace, it seems that it always gives you 3 times to get out. And for the bulls out there, I'd say to you, guess what? We've been up at these highs, and we've been up at these highs since March of 2015. And for the bears, I can say the same thing. When we come back down, we've been down to these lows of October of 2014. So take a shot, and you go from there. Don't forget, too, at TFNN, every trading day, we do 10 hours of live programming. Now, you can get all that if you're, wherever you're listening in your car right now, you can get all of that right on your cell phone. TFNN.com. You hit Tiger TV. If you haven't watched Tiger TV yet, folks, it's phenomenal. You get the charts all in HD, so you get audio, you get video. Great tool to really understand what's going on inside these markets. Let's go over and we take a look at that. First we'll go into the TLT, because the bonds, it seems to me that what we have happening here is that it looks to me that the rates are going to edge up a bit, and it very well may be the edging up of the rates that actually bring the market lower between that and, these numbers that the fundamental numbers they're coming out with are a mess, okay? They're not making their numbers. So if we take a look at the TLT, this is what you have. So the TLT is the 20-plus bond fund. The low of the TLT, the swing point that it's going into, is the swing point that was generated out here the week of March 11th. That's $127.21. We did volume there of 38 million. Well, we're coming into that with 35 million, so that means we're going to do about 38 million. Now, we're not at the price point yet. So what does that mean? That means it's going to wake up Monday morning. It's going to go after the 127.21, and that's always really dangerous when you're very close to a swing point, that you've come down with an expansion of volume, because we had when it was trying to get to a high last week, it did 27 million. We're going into a low now, and we've already done 35 million, so let's say we're going to do about 36 million. It's going after a swing point that has 38 million. Okay, so that indication there is that, guess what? You have an expansion of volume. You're coming into a swing, more than likely. It'll open at the swing, go after the swing. If you break the swing, what that would set up in the bond market or the TLT is that you take the 127, then you take the top, which is 135, so we got $8. That would bring it down to the 119 level, and the 119 level is your lower swing point. Actually, it's 118 from November of 2015. So at this particular point, that's kind of how that baby looks, that it's setting up. On a longer-term basis, if we go over to the couple stocks that got wrecked out here, Microsoft right now is down on big volume. We're at, let's see, you're at 107 million shares. The gate's never big enough to get out. Microsoft is trading at 51.76. That wants to go down to 48. We take a look at Google, and what you have with Google is that Google right now is down $38, 5 million shares, same setup, huge. Google wants to run down to 663, and we'll see how it handles that level down there. You're dealing with, let's see, it's the 29th. Next week, and this is why these fireworks are not going to stop. So when you take a look at Microsoft, let's see, yeah. Microsoft is 8.4% of the Index 100. Google is 4.9 rather, and Starbucks is 1.7. Next week, it's going to be all about Apple. Apple is trading at $105.51. Apple is 11.3% of the Index 100. Apple's going to be coming out with its numbers next Thursday. If we take a look at Apple on a weekly basis, what you're going to have is this. Last week, tries to get into a high, does 162 million shares. This week, goes down with 183 million. What does that set up? Guess what? That sets up lower price. You're at 105. 101 is game. And we'll see how it handles 101. So 101, folks, is the high of the January swing lows. 92 is the low, but there's a lot of volume there. So he has to pierce the high first, which is 101.53. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 13. Nasdaq's down 43. S&Ps are up $1.50. We're going to be right back.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We get the Dow up 2, Nasdaq's off 47, S&P's a flat, and if we take a look at the percentages out here, this is what you have. You have the Dow Jones flat, the S&P's flat, Nasdaq is down 0.9%. The Nasdaq had been down as much as 1.5, by the way. But what I do expect you're going to see here is that we're going to see a little more selling coming into the close, because the real kicker is going to be who wants to be long in the tech sector. Not necessarily the rest of the whole market, okay? I can understand that. But the tech sector, bottom line, is it's dictating things right now. So, next Thursday, you get Apple coming out with numbers. Wednesday, and this is going to be a big one, folks, is Facebook. Facebook right now is trading down $3. You're at $110. That setup there is going to be intriguing. The reason being is that it looks to me, and we'll find out, that Facebook is taking Google's share of advertising revenue. One of the main reasons that fundamentally this is that Google's down so much is that their advertising contracted versus going up. That being said, what you have out here in both Google and Facebook is that when they went south in February, they went south very quickly. So watch here with Facebook. Facebook was traded at $117 on February 2nd. It comes down. It goes in 5 days. It goes from $117 down to $96. We do that with monster volume. We do it with 56 million shares, 76 million, and then we go back up with 33 million. We tested again yesterday with 20 million. Okay, so now watch this. This is pretty cool. The way that is trading, the way Facebook is right there, that's saying that Facebook also somehow, some way, is not going to come in with the numbers that folks are thinking they're going to come in with. And Facebook can trade down to like $102 in a heartbeat. And why am I saying that? So check this out. I'll take this. I wonder if I can just compare this one. This would even be funnier. Watch this. I'll compare this to Google. Yeah, I think I can. Okay. I'll update it. And what you're going to see, yeah, you're going to see this. Okay, so I just put Google on the same chart. And what you're going to see is that Google did the exact same thing in February, coming down hard with juice. Now I'm just going to bring Google up by itself so you can see the volume characteristic on Google. And so what Google had done, and this is why, last night at the close and just in general, basically shotting the NDX 100, is that what Google had done is this, folks. Google was, on February 2nd, Google was at $789. 5 days later, it was at $663. I mean, that's a hit beyond belief. As it was coming down, it came down at 6 million shares. We had gone up Monday on 2 million. So you had 2 million going into 6, doesn't fly, okay? Bottom line, they come out with the numbers. Now what ends up happening, volume blows out of it again. You're at 5 million shares. And what that sets up, when you put this on a weekly now, what it's setting up is that it wants to get down to the 680. Right now we're at 719, and 680 is a high volume low. What it also is, though, is this. It's going to be hard to break the 680, 674 level in Google. The reason being is that last July, when we went topside, that's when Google came out with monster numbers. Google goes from 532 to 674 in a heartbeat. That number right there, the first time down is going to be hard to, well, the first time, we already did the first time down. The first time down was the lows that were generated in February. But you can see it was dramatically lighter volume. We did 15.6 million versus 23. Okay, so you can see how these zones are setting up, and they're really wide zones, and they're really setting up nice for great trading markets because of the width of the consolidation. The width of this consolidation is huge. So what that allows, of course, is that you can see how it hits the bottom, hits the top, does it hit it with lighter volume, does it reject price? That's what you want on both sides. What we have on the S&P right now, that looks like when we're closing out in another 20 minutes, is that the S&P at the 2104 has rejected the 2104, which is the December highs. The volume is going to be much less. We're going to be closing out somewhere about 2090, and so what that sets up, failure on price, failure on volume, all of the above, and we'll see how this shakes out coming down the other side. Let's go over to Harmony Gold, because we know that Harmony, with the Rand, was making an extraordinary run, and we'll just show you that nothing goes up forever, nothing goes down forever. So Harmony had made a run from 58 cents December 1st. 58 cents, it goes nonstop up to $4.19. Okay, so now what is it doing? Well, it's at $3 now. Percentage-wise, that's a big move. But what you want to, and this is important to wrap your head around too, is that when something makes a run that this large, you want to wrap your head around and say, okay, what is a normal retracement? Well, a normal retracement is a 50% retracement. That can bring it back to $2.36 and have nothing wrong with it. Now, the cool thing here is that number one, I suspect we're going to get that. And how we get that, meaning how we come back down into those levels, is going to basically tell you whether you want to buy it or not. Because what we do have is that we have a high volume swing high at $4.19. You're pulling back this week. We'll pull back with 32 million versus 80, so that's cool. And then what you're going to need is this. Then you're going to need a big contraction in price and volume. And what normally happens is this, particularly when something's gone up this far. Next week, I don't think it would contract on volume. So what you want is that, you can go to lower lows. Let's say it goes down to 250 or something. And then what you want to see is that you want to see it get lower and a huge contraction of volume. And if that's what you get, then that's your buy. Put your stop on the other side of it, and then you're off to the races going the other way. So it's going to be wild watching this whole thing shake out because let's go to look at GFI. GFI certainly didn't run like Harmony ran because GFI has a lot of other assets. Yeah, that's still consolidating. So it's actually pretty cool. So GFI has a lot of other assets outside of South Africa. This here is basically, let's put this up. Yeah, it's still in the consolidation. Newmont, we'll take a look at Newmont because what Newmont has done, which is cool, this is always cool, because Newmont came out with the numbers, they beat the numbers, so technically Newmont is still set up really nice. Fundamentally, it's set up nice because you already know what the numbers are. The numbers Newmont beat on the bottom line and on the top line. So as ABX, let's just see when Barrick is coming out with numbers. So Barrick's coming out the 26th. So we come back to work on the 25th, right? Yeah, we come back to work on the 25th. So that's going to come out Tuesday. So that's going to be some fun. That comes out Tuesday. Let me see when Nico Eagle comes out. The 28th. So there's going to be, there's action all over the place, man, next week. We get action inside Facebook. We get action inside Apple. For the tech sector, inside the minies, you're going to have some real action, too. You stay right there, folks. We'll be coming right back, coming into the next 12 minutes. It's a beautiful thing. Dow right now is up 9. Nasdaq's down 44. S&Ps are up $1.50. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go take a look at Cardinal Health. One of our Tigers want to look at Cardinal Health. So that's CAH. The low for the year is $74. The high is $91. It's trading at $86 right now. And, okay, so you're coming into the January downdraft. 2.5 million shares. And then Tuesday we did 2.1. No, Wednesday 2.1. 1.9, which is great. On Thursday at rejected price. I'm figuring you shot this, Mitch. Okay, so on a weekly, you're coming in with 10 million versus 7.6. Okay, so yeah, I'd stay right there. If you just shot this, bottom line is that you're going to want this to pull back quite a bit next week. You want it underneath the $84. But bottom line, the way that is set up right now is that that's coming into the downdraft, and it's coming into the downdraft with a lot lighter volume. So that is the one day, that Wednesday though, when it took out that swing, man, that's, you got to get it back under this $84.44. That's how that's shaking out right now. Let's go over and take a look at the E-minis when we're coming into the close and the NASDAQ futures. So the E-minis right now are up $3. Let's see. So the high of the last like 2 hours has been 2086, and right now that's right where we're at. So we'll see how this baby shakes out, whether it closes out at the 2082. The 2082 is where it was about 30 minutes ago. We're up, close out at these highs. That's on the E-minis. On the NASDAQ, what you have with the NQs, same type of setup. NQs are at 44.67, and the NQs definitely are weaker. There's no doubt. And that has to do, of course, is that's just a weighting structure, folks, and that weighting structure is a big deal. So the high in the NQs in the last 3 hours has been the 44.70, and the low was just generated in the last 10 minutes. That was 40. Let's see, where am I at? 44.59, and right now you're at 67. You know, so we'll see where this shakes out. They all close, of course. The markets close at 4, but the futures don't close to 4:15. So you'll see a lot of flipping around here coming into this close, and the real key is going to be how many people short, how many people are closing right now just to close their positions. That's what happens in the futures market. So you close because you made money, and then what you have, of course, is then you have the operators that are saying, okay, hold it. Do I want to be long or short over the weekend, waking up Monday morning? And they're basically, that's what's going to move these markets coming into the close out here today. You know what my take is? My take is that the NDX will close out as going downtown. The reason being is that when you look at the ownership of Microsoft and you look at the ownership of Google and the ownership of Starbucks, those three have huge institutional ownerships, and they're going to be hedging themselves, okay? They're not going to basically, you know, they can only get fired, folks, okay, if they hang on to something, okay? Because all institutions own the same stocks, what tends to happen, and, you know, years ago I used to talk about IBM quite a bit like this. So you could be wrong on IBM the whole time, but because every institution owns it, it didn't matter. That's kind of how this goes. That's how this goes in professional money management, let's put it that way. So you can use that type of knowledge, understanding how markets close and how markets open, you know. So it's a counterintuitive deal, but, you know, we'll see where it shakes out. But that's kind of how... that's my take on how it shakes out when you come into these closes or these opens when very large weighting structures are down or up. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Have a great weekend. Have a safe weekend. Look forward to speaking to you right back here Monday morning, 8 o'clock. Wow! Go get them, folks.